Okay, let's move on and let's welcome on board v.p. Nandakumar, the MD and CEO at Manappuram Finance, joining in on the show. Mr. Nandakumar, thanks for joining in. You've reported a strong profit growth of 36%. What particularly led to this strong profitability in this current tough environment?
The major reason is our products. Our major product, which constitutes around 60%, is gold loan. Our gold loan, the contract period is 3 months, and the average the loan period is around 70 days. So, in this product, the asset liability, if you take the asset liability management, the ALM, it is positive. Because of that, the lending institutions prefer to lend us. So, our liquidity position had been and have been comfortable. The second major product, which constitutes around 20%, is microfinance. Being the PSL advantage for the bankers, so the securitization opportunities are very good, and the asset quality, the collection is more than 99.5%. Because of that, we are able to get money there also. So, these are our major lending areas. So, not only that, we got bank funding from IFC, International Finance Corporation. We got funding during the last quarter from NABARD, etc., who are new lenders to us. In the gold loan segment, we are the first company to get funding from IFC.
Can you tell us how the growth has been for the core gold loan segment and how demand has shaped up? What is the outlook?
Our expectation was to grow around 10 to 15%. We hope that we'll be able to achieve that.
And can you shed some light on the gross NPAs and net NPAs in the quarter? Which are the segments that are showing you higher stress? And what are the asset quality trends that you're observing for FY20?
In gold loan, where the contract period is 3 months, the NPA is only technical. That also is around 50 bips. In microfinance, the collection, which is the second major portion of our business, the collections are over 99.5%. So, these two constitutes around 80%. The other constituents are all lending to NBFCs, then there is no NPA. Vehicle finance, it is in line with the industry. The NPA is around 2.5%. We have got a small home loan portfolio of around 500 crores, where the NPA is around 3%, 3.5%, nearly 4%. That is the NPA level. But overall, the asset quality, if you take the asset quality, the net NPA is below 50 pips.
Right. What has been the impact of heavy floods reported in Kerala and Maharashtra on your financials, and what kind of total exposure do you have to these geographies?
Our experience is that during this flood and during the next 1 month or so, the repayment may not be there. After that, there are a lot of economic activities there, a lot of money is coming in. So, for our type of customers, their financial because of a lot more financial activities happening in that places. In those places, their income level goes up and they regularize these accounts over a period. So, it doesn't actually lead to any credit loss. This is our experience. Then the second part of your question is our exposure. Our exposure in these flood-affected areas maybe on a consolidated level will be much less than 5%.
Okay. And how are the margins in the first quarter? Is there a case for margin expansion in the latter part of the fiscal too?
So we maintain this net interest margin. If the cost of borrowing coming down, we pass on that benefit to the customer. Similarly, if there is a cost escalation, in the case of gold loan, we pass on to the customers. So we try to protect our net interest margin. In microfinance, there is a 10% margin cap, and it is maintained like that. These are the major areas. In other areas like on lending, similarly vehicle finance also, some portion is passed on. So overall impact is the overall net interest margins are protected.
Okay, and tell us, what is the share of the non-gold segment to the overall AUM, and what is the kind of profitability that you're looking at in this segment?
So the non-gold portion is growing faster, especially microfinance is growing faster. Currently, the gold is around 60%. The other around 20% is microfinance, and the balance the other portfolios, which includes vehicle finance, on lending to NBFCs, SME loans, plus housing finance loans. These are the distribution. Regarding the profitability, gold loan, we have around an ROA of around 5%. So, in the case of microfinance also, the ROA is around 4%. In the other businesses which are small, where the OPEX is low, but all showing profits or started showing profits. This year probably vehicle finance the ROA can be over 1% this year, because the businesses started showing profit last year only. Maybe 1 to 2% ROA is expected. From housing finance also the ROA can be around 1%. On lending, we get an ROA of around 2.5%. This is the profitability. Overall, we expect to maintain an ROE of over 20%.
And last quarter, you had mentioned that you're expecting lower funding costs. Is the funding cost coming down? And how do you see your borrowing mix shape up over the next 1 to 2 years?
No, we were not able to witness that. The borrowing cost, we couldn't bring it down because of the market conditions. But with RBI reducing the rates, etc., 30 bips, they have lowered the policy rates. But the banks have not passed on. So, with the new changes like some of these like housing, SME, etc., have been brought to priority sector, etc. So in these areas, there are chances for securitization where we will be able to get the funding advantage. In others also, the government's policy is to drive these down to the customers. So, with the government also wanted to bring it down, and the government is consistently advising the bankers to bring it down. I think something can happen now, because State Bank of India has reduced their rate by 15 bips already. So the banks may follow. This we may get the advantage because of these new policies.
All right, and how were the disbursements this quarter, and what is the outlook?
Yes, gold is showing a trend to achieve a growth of 10-12% growth this year. So the other businesses like vehicle finance, they may grow at a higher percentage, may be able to grow around 40-45% because the base is small. Similarly, the microfinance, they may grow around 50%. Similarly, the home finance also, the base is small, may grow by 40-50%. That is the expectation.
Right. Okay. And thanks very much for taking the time out and highlighting your earnings. But we're going to wind it.